Every single day, millions of dollars are produced inside the United States. Not casually, not loosely, but with extreme precision. Every bill is printed, inspected, verified, and engineered to be trusted. Perfectly printed, carefully inspected, nearly impossible to fake. But here's the truth most people never stop to question. What you're seeing is not where money is actually created. The system you can't see. Because the real system is invisible. And once you understand it, you will never look at money the same way again. What most people call money is just the surface layer. Underneath it is something much bigger. A system you use every single day without ever truly seeing it. Inside the money factory. Deep inside one of the most secure facilities in the world, physical money is produced, but it's not made from ordinary paper. US currency is created using a blend of cotton and linen, materials designed to survive years of circulation, folding, friction, and wear. Each sheet moves through multiple stages: printing, alignment, inspection, verification, layer after layer, detail after detail. This isn't just manufacturing. This is engineered trust. Because for money to work, people must believe in it instantly, the moment they touch it. Precision creates trust. Look closer, and the bill transforms into something else entirely. A security system. Hidden threads woven into the paper. Ink that changes color depending on the angle. Microprinting so small most people never even notice it. Every detail serves one purpose: to make counterfeiting nearly impossible, and the standards are absolute. If even the smallest defect appears, the bill is removed and destroyed. Because this isn't just about quality, it's about maintaining belief. Because the moment trust breaks, the entire system starts to crack. Who really controls money? Here's where things start to shift. The government prints physical money, but it doesn't fully control the system. That responsibility belongs to a much larger force, the central banking system. Institutions that influence interest rates, inflation, and the flow of money through the economy. Printing money is one thing, but controlling the environment money lives in is something much bigger. Because real power isn't just about producing currency, it's about shaping the conditions that determine how money behaves. The part nobody talks about. Now, here's the moment everything changes. Everything you've seen so far, the printing presses, the security features, the stacks of cash, is only a small fraction of the system, because more than 90% of all money does not exist physically at all. It doesn't sit in vaults. It doesn't move as paper. It exists somewhere else entirely. Money that isn't physical. Most money today exists only as numbers on screens, balances in bank accounts, transfers between institutions, entries inside databases, no printing press, no stacks of cash, just digital records. And yet, those numbers function as real money. You use them to buy food, pay bills, run businesses, move savings, because the system agrees they count, and that agreement is what gives them power. The strange reality of banking. Now the story gets even stranger. When a bank gives you a loan, it's not handing you money that was sitting somewhere waiting. In many cases, that money didn't exist before the loan. It is created at that moment. A number appears in your account, and suddenly, you can spend it. That means the loan is not just transferring money, it's creating it. Not stored, created. This changes everything. Because the real money factory is not a building full of printing machines, it's the banking system itself. The place you trust to store money is also one of the places money is created. Once you see that, your entire perception shifts. The physical dollar becomes just a symbol, a representation, while the real system operates behind the scenes. Inside lending, inside digital records, inside financial networks. The hidden catch: debt. But there's a catch. Every dollar created through this system doesn't arrive as free money, it enters circulation as debt. It's borrowed into existence, whether by governments, businesses, or individuals, and that debt always carries interest, which means more has to be paid back than was originally created. So where does the extra money come from? It has to be created too, through more lending, more borrowing, more expansion. The system, by design, requires continuous movement. New loans help pay off old ones. Fresh money fills the gaps left by interest obligations. And because of that, the system is never truly still. It depends on growth, on rising productivity, increasing consumption, and expanding credit. Without that forward motion, cracks begin to appear, defaults rise, liquidity tightens, and the pressure builds. That's why economic slowdowns feel so intense. The system isn't just slowing, it's straining against its own structure. This doesn't mean collapse is inevitable, but it does reveal something important. The system isn't built for balance, it's built for momentum. Because once money is created as debt with interest, standing still is no longer an option. The system must keep moving forward, no matter what it takes. The endless cycle. So the system becomes a loop. Money creates debt, debt creates interest. Interest requires more money, and the cycle repeats, again and again and again. Expansion isn't optional, it's built into the system itself, and most people never notice it because they're simply living inside it, using bank accounts, using credit cards, taking loans, making payments, but underneath all of it, the structure keeps moving forward. The power behind money. So who actually controls money? It's easy to assume it's just the people printing it, or governments, or maybe powerful banks sitting behind closed doors. But the truth is far more complex and far more subtle. Control doesn't live in a single place. It exists across an entire interconnected system. Central banks regulate supply and interest rates. Commercial banks decide who gets access to credit. Financial markets react, amplify, and sometimes destabilize entire economies. Then there are the rules, policies, regulations, and global agreements that quietly shape how money moves across borders. Because controlling money isn't just about creating it, it's about directing its flow. Who gets loans, who faces restrictions, which industries grow and which ones collapse. At that level, money is no longer just currency you can hold or spend. It becomes something deeper, an invisible architecture that supports entire nations, a system of control, trust, and dependency. So the real power isn't in printing money, it's in shaping the system that decides where it goes and who it reaches, what money really represents. So the next time you hold a dollar, look at it differently. It's not just value, it's trust, and not just trust, control, and not just control. A system far bigger than most people realize. The bill in your hand is real, but the system behind it is invisible. And that invisible system is what shapes the world around you. Final thought. Most people think money is simple, something you earn, something you spend, something you save. But the reality is much deeper. Because money isn't just created in factories, it's created inside systems. Systems designed to expand, to grow, to continue. And once you understand that, you stop seeing money the same way again. Outro. If you think money is just paper, you're already behind. Because what you've seen today is only the surface. If this changed the way you think, make sure to like and subscribe. Because the next time you look at your bank balance, you might start asking a very different question. Where did that money actually come from?